Everyone. Welcome to the Main Street Money Podcast, where Wall Street meets Main Street. I'm Andrew Gay, along with Gilbert Paz. We are the Texas Hill Country Advisors, independent financial advisors based here in the beautiful Texas Hill Country in Kerrville, Texas. We are missing our colleague, Zach Green, today, but he is with us in spirit. And we're here to give you our perspectives about what's happening so far in markets in 2026 and maybe a little bit about insurance products. I think that's what we want to talk about today. So 2026 has been off to an okay start. We had a couple of down days in the stock market this week, but it's been green across the board.
Yes, today's Friday and we haven't finished up the week, but so far it's okay. I can tell you last week, though, we had a very good week in the market. The S&P was up 1.5%. The Dow was up 2.34. The NASDAQ was up 1.88 to give all three of the major indexes a positive start to the year. Now, 2 weeks does not make a year. So we've got a long way to go, but so far things seem to be carrying on as if it was a continuation of last year's positive gains. And that's another thing. We've had, as you said, 3 straight years of positive gains and
10+% positive gains.
Yes,
in the stock market.
And so one of the major things that we've been getting questions about over the past few weeks is how long is it going to last? And what do I do to protect myself?
And we tried to consult our crystal ball, but the thing doesn't seem to work any longer. So we do have a few ideas to throw at you. Now, you have to understand everything we say here is educational. You should always talk to a financial advisor before making any moves yourself. But we just want to give a general overview of some of the options that are out there. So specifically insurance products, right?
Yes.
So insurance products insure risk. Different types of risk all across the board. But what we're talking about today is not property and casualty insurance like auto, home insurance. That's not what we're talking about.
Which you do need, by the way, but that's a whole separate conversation.
Is part of your financial picture, so to speak.
Sure.
But what we're really talking about is life insurance and annuities. Sometimes those can have a place in your overall financial picture or even in an investor's portfolio. So we wanted to kind of talk about that a little bit today. And the way that I started this conversation off is saying that, a lot of times or sometimes people can get presented some of these products by insurance agents. And you have to remember that insurance products in of themselves, they're not necessarily good or bad. They're tools. Okay. But in some instances, insurance agents don't have securities licenses, right? And they don't necessarily take into account your full financial picture when they're talking about life insurance and or annuity products. So we think here at Texas Hill Country Advisors that these should not be sold or talked about or discussed in silos. We think that these should be a part of your overall financial plan or your financial picture, so you can kind of back into if they make sense for you as an investor in your portfolio. I think about going into a restaurant, and when you sit down, unless you're at a Chef's Choice restaurant, some fancy something that's like a chef picked the menu and you don't have a choice. What's the first thing you get handed? Well, it's a menu, right? So the waiter doesn't sit you down, our host doesn't sit you down, and then the waiter comes over and tells you what you're going to have. They present you with a menu. So you are presented with a bunch of options. And I think the same concept applies here, where, okay, you might have options for life insurance and or annuity insurance products, but I think that you should look at the full spectrum of everything that's available to you to try to make a decision, an informed and calculated decision about where those fit in, if they do at all, into your overall financial picture.
And just like going to a restaurant, if you go to a restaurant and they hand you a menu and you go to that restaurant regularly, you might feel like one day you need this off the menu, and the next day you might feel like you need something different off the menu. There are different choices that you can choose from. And as your life changes, some of these different products probably will change for you too. But it depends. Everybody's different. If you don't talk to somebody that has access to the full complement of options that are available, well, then you're not really getting the whole story.
Right. So I'll pick on life insurance. So I have a family member that is an insurance agent. And if you ask them what the best thing for a young kid is to start saving for their future, surprise, surprise, they're going to tell you buy a whole life policy for that kid at 6 months old, right? And once again, just as a reminder, this is not to say that you should do any of these things. We're just laying out the fact that there are options.
Should or shouldn't do any of these things, right?
Sure, right. So, there are some benefits that come along with buying a whole life policy for a kid at a young age. You hear a lot about the cash value portion of that and how that mechanically works and some of the benefits that maybe may manifest itself later on down the road in that child's life. But there's also something called a 529 plan that can help you save in an investment account that can generate compounding to dollar cost averaging for that child's college or tuition cost, education expenses for secondary education later on down the road. So if you plan on, spending most of maybe that child's expense might be spent on some prestigious school that you want to try to send that kid to, maybe that makes sense for you as opposed to buying the life insurance policy.
And of course, 529 plans for many, many years were exclusively designed for higher education expenses. Now, with some of the broadening out and changes in the law, some of these, all 529 plans can now be utilized for primary education too. So elementary, middle, high school, private school education, with some limits and caveats, but there's a lot of uses now for 529s, whereas before it was exclusively for higher education.
Right. And in that example, one of the maybe drawbacks or sticking points that you might focus in on is the premium that you would pay for like a whole life policy. Well, you're kind of on the hook for paying what otherwise would be maybe a larger amount that is not that flexible in many cases for you to contribute to get those benefits down the road for that kid, versus something like a 529, which is completely open-ended and flexible. You choose how much you contribute. You don't have to contribute certain years. It's not the same as having a premium or being on the hook for paying a premium.
Right. You can stop contributions. You can increase them, lower them. You can have multiple other people contribute to the account.
Yeah. Okay. So let's shift gears a little bit and then bring up annuities. All right. So currently, as we speak, there are about 5 different main types of annuities. Okay. And instead of getting into the weeds and listing them all off, we want to say that they're actually mostly all used for different things. Okay. So there's different risks, if you will, that they insure that you can get out of these types of products. A lot of times you hear people like Fisher Investments, doggone annuities, because really they're talking about when they talk about high cost being embedded in annuities, they're talking about one specific type of annuity. Well, guess what? Some of those annuities out of all 5 types don't have any cost at all. It just depends on what type of annuity you're talking about.
Well,
right?
They don't have any embedded or they don't have any ongoing management fees is really what we're trying to say.
They don't necessarily, some of them don't have a cost to the end user as for you as a client necessarily.
Yes.
And then some on the other end of the spectrum have extremely steep fees and high cost. And so, you might ask yourself, well, then why would anybody ever buy something like that? Well, it goes back to the risk story. We usually say that whether it's an insurance product or some kind of portfolio sector of investing, whatever it is, you probably don't want to put all your eggs in one basket. And same thing here. Would it make sense in some instances to look at one of those products that do have higher cost to try to mitigate some risk for you because it applies to your specific financial picture? Sure. Yeah, it might. But that's why you talk to a financial advisor about it. But in some cases, it might not. Once again, that's why you have these conversations with people like us as financial advisors to help you determine whether that even makes sense for you or is applicable to you and to your portfolio.
Mm-hmm. What I would say too with about annuity products specifically is they all have one thing in common, which is you're shifting the risk from you, the investor, to the annuity company. And depending on what annuity product you're looking at, what specific one you're looking at, you can shift some of the risk to them, all the risk, a portion of the risk. You can do different things with those products that you can't do otherwise. And because it's an insurance product, typically there's some benefits that come along with having that with an insurance product. But you're shifting the risk from yourself to the annuity company in one form or another. And there are specific reasons why these types of products exist. And we could go through the 5 main types that you were talking about earlier, but I think we'll save that conversation for another day. The main idea is they all exist for a reason because they make sense in certain unique circumstances. And without knowing your circumstances, it's hard for us to really tell you which one's quote unquote best for you. There is no such thing as the best. It's what works for you in your situation. And as financial advisors, we can give you recommendations and ideas that will really help you in the long term protect and grow what you have.
Right. So let's wrap up by saying that before you buy any insurance product, please talk to a financial advisor, whether it's us or some other financial advisor that has life insurance licenses along with securities licenses and can take a holistic approach to your financial picture and maybe give you some recommendations there before proceeding with a siloed purchase of an annuity or a life insurance type product.
And for our listeners that don't know, Andrew and I are also licensed life insurance agents.
Yes.
So
yeah, and a lot of people don't put that together that,
Yes.
oh yeah, you do investments and portfolios and right. We have all those securities licenses, but we also have life insurance license for annuity products and life insurance.
Absolutely. So if life insurance is something that you're looking for, you think it might be important for your situation, typically life insurance is for 4 main reasons: death, income replacement, debt, income replacement, mortality or death. Somebody's going to die, and perhaps educational expenses or future expenses that you are planning for. So, life insurance is very, very important. But interestingly enough, not everybody needs life insurance, and they certainly don't need the same amount. So if you're not sure, you got questions about that, reach out to us. If nothing else, you can look at the internet, and do your own
Dirty word.
research and find out more about some of these reasons to purchase annuities and life insurance. And once you get confused and thoroughly freaked out about what's on the internet, then call me, Andrew, and we can help you figure it out. And Zachary too, even if he's not here.
Yeah. Touché. Okay, guys, that'll do it for us today. Thank you so much for tuning in. Don't forget, interact with us, share our content, helps other people find the show. We're on Facebook, YouTube, and LinkedIn. Thank you so much. Have a wonderful weekend. We'll catch you back here next week. Securities and investment advisory services offered through LPL, a registered investment advisor, member FINRA SIPC. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision.